Well, good morning, everybody, and welcome to the TriggerCharts pre-market rundown for January 17th on a Friday, of course, 2020. I'm Andrew Horowitz. I am one of the co-founders of TriggerCharts, and I want to thank everybody, by the way. Not only are we now the #1 highest rated, but also #1 on a few different marks in the TradeStation trading app store. The reviews keep coming in, and I got to tell you, I talked to a few people this week, and it was really nice to see how they were making a substantial amount of money in the markets utilizing this. Can anybody see my screen? Can we get a quick chat over here? I'm going to put the word here, over here, right there in the chat. Can anybody see my screen on the right-hand side over here? Should be able to see that. Good morning. You got to click back to me and type. Yes, thank you. Thanks, Dean. Thanks, Bob. Thanks, Rod. All right, good. So what are we going to talk about? First, I want to mention that this is for educational purposes only. It is not a recommendation to buy or sell any security, and it is really just to take a look at some of the market and some of the things that are affecting markets right now to give you some ideas and some thoughts, and then do your own research, of course. But make sure that you do understand, I think that you do, that it is, in fact, a educational purpose only. So let's, everybody read this? Okay, let's move along. What I want to talk about today is some of the things that are really moving the markets. And of course, we have #1, the trade deal was signed, the skinny Part 1, Phase 1, partial trade deal that was signed with a lot of pomp and circumstance this week. And really, if you get down to it, it's about 96 pages, not a lot of meat on the bone. There's really not a lot of significant requirements from either party, although there are some aspirational requirements inside of there. And one of the things that we did find that was really interesting is a couple of lines, if you really start looking at the details, that showed that this was a pretty much an easy out clause that is involved. If either party doesn't like what the other party does, the ramifications for that on the U.S. side are to potentially raise tariffs again, increase tariffs on China and China's goods. And on the other side, if they don't like what's going on, well, they could just pretty much say, we're no longer a part of this contract. So I don't know about you. I would love to sign a contract. I mean, think about this. You sign a contract that says, you know what? If we don't like this, we could just tear it up and forget about it. There were a few things in there regarding some technology, some ability for companies in the U.S., particularly financials, to enter into the Chinese market. And of course, they're going to be buying upwards of $200 billion worth of goods over a 2-year period of time, broken down about $30-ish billion of agriculture, which they need anyway. And it's going to be on pretty much a supply and demand basis. So markets are reacting pretty positively to this. And I think it's more of the fact that this is just something that psychologically can be put to rest for a little while, and we don't have to deal with it. And the hope is that maybe we'll see that companies are going to be finding it a little bit more palatable if there aren't going to be at least the constant threat of new tariffs and a changing of any kind of trade relationship to maybe spend a little more, do a little more capital outlays, possibly, who knows, maybe hiring, maybe feel that they don't have as much hanging over their heads in order to hold back their businesses. So it looks like right now this whole trade deal issue is giving us a nice little lift, and we have seen the market. You'll see on the right side of our screen here when we're looking at the S&P 500, when the idea that there was going to be a trade deal signed sometime soon pretty much take off. Of course, I have to say, because it's really important to notice and really to see that this also corresponds and correlates extremely high and very tightly with how much money that the Fed is flushing into the markets, as well as the fact that if you look at any major economy and government around the world, I don't think there is any, besides maybe a couple, that are not in an easing process in terms of their central banks, where they're either lowering rates or they are very dovish in their conversation, thereby allowing for investors to feel pretty good about things. Last night, we saw that China came out with their GDP, the lowest in 29 years in terms of their growth rate, And there was some specks of good news, or I would say better news. Not good news, but better news in that it may be a bottoming process. The theory is that now that we have this trade deal and there is some kind of, I'll say a truce involved in the trade war, that maybe China will be able to bottom here and start to see a little bit of upward action. We do have another week of new highs in the markets, and it looks like today with the futures at least, the futures up 92 right now on the Dow. We saw 9 on the SPUs or the S&P, and the tech again, tech-heavy NASDAQ is leading the charge. We've seen that over the last year, but specifically over the last number of months, ever since this breakout, we've seen some incredible numbers on returns when it comes to tech shares and our high beta types of positioning. Earnings season has been started this week. And yes, we saw some of the major banks and financials come out with their earnings, and for the most part, did pretty well. A couple of questions. We saw Bank OZK come out today questioning about the net interest margins. I think we talked about that a little bit last week. Some of the question of what's going to be into the earnings season. Right now, what we're seeing is that Morgan Stanley not only met and beat by a small amount, but really raised their profitability targets. Stock was up 8% yesterday. Goldman Sachs, not so great. Bank of America, Wells Fargo. But we did see the rest of the banks at least meet or exceed expectations. And that is putting another positive spin on the markets in that, well, it's not as bad as could have been expected. Even though we have earnings growth that is slowing down or stagnating, and that's off of a very significant base where we had a tax cut a year and a half ago or so. So we're still seeing a lot of that really feed in. There was a statistic put out yesterday that showed that about $32 billion worth of overall gains were pushed onto banks due to the recent tax code. And that's obviously helping things go. Financial staples and light technology earnings next week. What I mean by that is we're going to see the many of the asset providers, and we're going to see some of the brokerages report next week. Some staple companies starting to come in. Technology, a couple of names, IBM next week as well. And then we're going to see the following week it really to kick up with a lot more of the big names that we want to see. One of the things we did see this week was a little note out of New York saying that, hey, you know what? We think we're going to legalize. So the governor came out and said that this could be a great opportunity. Of course, we know that many municipalities and states are looking for a significant amount of tax revenue to come in. And one of the ways of looking at it, because a lot of them now have gambling, are saying, well, if we get marijuana legalized here, well, we can have a lot of taxes coming in. So New York is the latest to kind of hint that maybe, well, we're going to legalize it for recreational and for medical use, and pot stocks got a bit of a lift this week as well. An interesting statistics that I wanted to share with you was that 418, as of the close yesterday, 418 S&P 500 stocks are now over their 200 daily moving average. This is the first time since January 2018, going back more than a year and a half, well, close to 2 years, that we've seen that. It is a little bit of a question mark where you see that at the same time where, hey, it's good that we're seeing there's a lot of strength, a lot of bullish tendencies. The trend is definitely moving in our direction. I mean, obviously, from this chart, we could see the trend is moving in the direction of up. A couple of dips here and there, but for the most part, nothing significant. I mean, we really haven't broken a trend line if you kind of draw those bottoms in there for a while. Kind of, even if it did break, it was temporary, transitory, momentary. So over here, back in the beginning of 2020, of course, we saw that in this level here, that we're seeing it at the beginning of December. But other than that, really, there hasn't been any significant breaks. Every single time that we saw a dip, it's a bit of a long candlestick on the downside. Pretty much within 2 days, 3 days, it resolved back to the upside. And again, that's because there's a lot of liquidity in the markets, a lot of bullish activity going on, as well as the buybacks. And of course, because we're in an uptrend. I mean, that's the bottom line. We're in an uptrend, right? All right, what else do we got here? Moving markets this week, as I mentioned, the bull trend. Buy and then think is really what's going on. Push the button and then figure out, was this a good idea? After the fact seems to be what's going on. We're seeing a lot of buying into the indices and into index funds, particularly the large caps, which are now controlled primarily by just a handful of names. Very interesting to look at. Tom McClellan put out a piece last night talking about the number of shares on the SPY, S&P 500 ETF, and he tracks these and looks for significant tops and bottoms. And oftentimes when you see that there are a lot more shares outstanding because of the ETF creation methodology, it is a sign of concern. Almost historically, when you saw these peaks, these levels that we've seen now on the amount of shares on the S&P 500 or SPY ETF, these are signs of major tops. Now, whether or not it plays out in a crash, a pullback, or maybe a consolidation is really up for question. But it has been pretty consistent over time, besides one time in December, and he, for some reason, discounts Decembers because I think of end-of-year rebalancing, profit-taking, tax trading. It is a sign of an interesting top. I don't know. Do we look at this level here when we're looking at this chart as a blow-off top? Possibly. Haven't really seen that kind of gap and go for some time. We saw it back around here, but still, that was only after a little bit of a move back to the upside. Right now, there really hasn't been much downside move, and this little bit of a gap on the upside for the S&P yesterday, the gap and go that we saw, well above our level of support and resistance, which we call the altimeter. Clearly in a buy. If you notice, the green is when there has been a buy signal on the SPY for the autopilot, for the TriggerCharts autopilot. I'll mention, by the way, I'm going to put this in the chat, that two things. Number one, if you want to see some more overview videos on the inner workings of any of the indicators that we put out, you can go over to TriggerCharts.com. There's an indicator overview page. It gives you all of that to take a look at. So I think it's pretty important for you to spend a little time looking at that. I'll also mention that anybody that does, in fact, subscribe, you get a subscribe to the Commander Series. New subscribers get a 4-hour, totally free, 100% free, 4-hour coaching session online. It's a play-as-you-go concept. You can watch it a little bit, come back to it, review it. There's multiple parts of it, 3 parts over a 4-hour period that gives you a really good, I would call it an evergreen style of technical analysis blended with market profile and volume at price. All right, what else do we have? So the other thing that I'll mention is moving the markets this week are central bank easings, which we mentioned, also limited headwinds. We've seen that many of the headwinds, the concern, at least temporarily, about Brexit, the concern about the trade war, the probability of an impeachment. You know, you can go on the list. Iran, as we called it last week, the 23-hour war. All these things have been put to the side. CPI and PPI came in as expected, rather tame this week. Retail sales came out better than expected. And in fact, the holiday sales, based on the National Retail Federation, came in at plus 4.1% this week. Next week, good news, maybe. Monday, markets are closed for observation of Martin Luther King Day, MLK Day, and we're going to have a very short week. We also have a very, very limited week of economic data next week. It's really where earnings are going to hit in pretty hard. We have existing home sales, initial claims. And by the way, this morning, we saw some home data, and we saw that new home starts, housing starts, off the charts, 1.6 million on the print versus 1.39. Pretty good. Building permits dropped a little bit. Probably there's a little bit of pull forward on that. But we're seeing that the housing market is pretty strong right now. And we also saw yesterday the confidence of the housing builders or the home builders pretty high. We're going to be looking at Tesla. We're going to be looking at SIG, crude, of course. Alcoa came out with earnings yesterday. The old bellwether, no longer that important. I mentioned this. I'm going to mention it again. Space, Virgin Galactic, took off last week like a rocket ship. Just using some puns there. And we talked about that last week. Hopefully some of you took a look at that one. A couple of things I want to mention here is this is the key reversal indicator that you see. There's an indicator that we use. It's just one thing only. Looks at the SPY, a broad-based measure of the markets, as well as including a lot of psychological measures. It doesn't give a significant amount of indications or signals very often, but what it does do is tell you when there's things like oversold, maybe overbought. Right now, when we see this, if you look, it gives you a little bit of an explanation. It says the overall market, as measured by the KRI, or key reversal indicator, is nearing equilibrium with a slight bias towards upside movement. Once we get into the range, and I'll show you, when we start seeing this really get hot all the way over to the overheated or oversold, like we saw here and here, these are times that you want to start thinking about, wow, maybe there's some bargains in the market from a technical and psychological standpoint. Right now, where are we? Starting to get a little bit overheated, but not so much that's really that terrible. A 1% pullback will probably pull this right back into area of market in equilibrium again. This is a very inexpensive way to just look at this and glance on this, because what you'll find here is the ability to see what is the overall market tendency, what is the bullish factor. And even though we're seeing new highs be made, we're only at a +2. Really haven't seen it overdone since way back here in June, and even then we saw a little bit of a move higher, but at that point we did get a signal, and it was a dot that was drawn on there to be cautious moving forward. And of course, that roll down that happened very dramatically into August. And then once again, got another signal that it was overdone to the downside very significantly. Not as bad as we saw it when we look back to 2019. This was a back up the truck concept where we got into one of the lowest levels we've seen in a very long time, a -7 print. And you see there's multiple signals here. If you do check this out and you do try this, know that you cannot do anything with this indicator. You can't put another symbol in. It is the SPY alone. Other thing I want to mention here, this is kind of interesting. This is the McClellan oscillator. This is just an internal way of looking things. We see the 52-week new highs that are printed on the, this is on the NYSE, up 296 new highs yesterday. And that's pretty much getting into that level that we've seen historically as towards the peaking of that level. The McClellan is popping higher. We're seeing this right here, a 96 on the Spearman. This area down below is the Spearman. Something to take a look at, because when I see the Spearman peaking out like that, what I look for is the next rollover. And oftentimes when you see those rolls, and especially when it gets below the, it starts rolling below the zero, it's time to be concerned. When it is really pinned down to the -90, it looks like an oversold situation. So what are we talking about here? All right, let's take a look at some of the stocks. Let's look at the ES, which is the generic. Of course, we always mention that the generic is the best way to look at futures, because what you do is you could get the greatest amount of volume and price data that is input into the system. The more data you have, the better your signals are. And we basically had, it looks like from right about here, from about on a weekly basis, the long-term overall trend, where we got a signal of yellow, which is an alert, and then turned into a green is a buy or a long bias signal. And it was interesting that that happened right even as our aileron, our momentum indicator, was kind of basing out there, but it was pretty shallow. It wasn't as deep as we saw back here. Now when you start to see that start to roll up, pretty good numbers, and it obviously resolved higher. We're going to kick this back to a daily screen, and you'll see that pretty much the same look here. We got a couple of outs when the futures rolled a little bit. Got some consolidation, then a breakup again right there on the 8th, and you got another signal on the long side. At the same time, the momentum was continually positive. So really not seeing anything significant to the downside. Gold on the GLD. A lot of people ask about this. Still seeing a pretty good momentum, starting to slow down a little bit over here. I would say that you have a really good, and one of the things we do, and I tell you this all the time, just draw another line here. Find consecutive lines across that link up, and you can move that anywhere you want. And basically we're seeing that until you get down to about 143, you have some good support on this. I would say that really, if you are long gold, somewhere around the 142 level is another area of reasonable amount of support. Not the greatest support. I really like about 140 on gold for support, as we see a lot in long-term consolidation and support in that level, in that area. Hey, one thing I do want to mention, for those of you that are subscribers, is something new you're going to see here. I want you to look particularly at this area where we see NAs. See right here? We see NAs on the chart. This is the updated version 13. If you haven't downloaded it yet and you are a subscriber, download it. Because one of the things that have happened historically was that we saw a stock that, for example, only had a short-term amount of history. So the history doesn't go back that long. This one may go back long. I'm going to have to look at this one. And this one goes back. I'm not sure why this is showing an NA on there. I'll have to look at that. Let's click this. Cancel. Not sure why that one's showing an NA, but I probably have to refresh my screen here. But there we go. So anytime you have a stock that is doesn't have enough data in it, well, what's going to happen is that you're going to see an NA in there, but the rest of the calculations will work. I'll have to look why NA is not calculating on the weekly. That doesn't make a lot of sense. But nonetheless, it's probably some aberration with that particular name. Good news is that when you put a stock in like a new issue like DocuSign, you'll get all the other indications and the bias along, but just an NA inside of this level. And if you have any other, like an LK, for example, LK, it only has a number of weeks. Look at that stock go. But it only has a number of weeks going back in history. Not enough data to really give us enough weekly bias. So what's happening there is that it is providing us with an NA so that everything else can calculate across the board. Again, any other new issue that comes out or something that maybe doesn't have data will do that. Let's take a look at a few things. Tesla, for example, Tesla trading down about $5 today. Tesla overall has been in a long for 20 weeks. It is 4 weeks, and you can count that 1, 2, 3, 4 right there. 4 weeks on the long side. Looks like possibly covered. Let's see, where did it close yesterday? Closed yesterday at 513.49. It did slip down yesterday, got into a consolidation, popped right back up. That was a really good support line for Tesla. And you can see all the times that we called them in and out on this. And right now we're starting to trade right about, where are we now? 508. So if we come down below this this 500 line, give or take, is going to be an area to look at. And whether or not you believe that Tesla is overvalued or doesn't have any value, whether or not you believe that there is a indication of maybe just a bubble, I don't know. But the fact is, we're seeing that from a technical analysis, and that's really what we're talking about here today, and always when we're looking at charts, is the fact that it's working just fine on the aileron, and we're seeing it's working just fine on the uptrend. So that's pretty good. SIG, this is an interesting stock. I want to show you this. I want to go back a little bit. This thing dropped off from a high of about 70 in October. There was some concern about, I think there was some stealing of or replacing of diamonds and some question about their earnings. A lot of short players and major guys were in this, saying that this was a stock that was going basically to zero, and they had a decent earnings quarter, popped up. Why? Well, if you look at this, there was this big consolidation in the range. So let's pick up our tools and let's look at a box tool. Where's my box tool? That's not what I want. Where's my box tool? My box tool is lost. All right. Well, we're just going to go to a different box tool. Got this consolidation right about here. And that consolidation is really showing us that there was a substantial amount of opportunity, and really could blend that down to even a shorter period of time. That consolidation through there, shorts covered, and what you got there was a very big pop, up 42% yesterday. Now, what do we got? We got this one I mentioned also. This is SPCE, Virgin Galactic, thinking about maybe going to space. Well, what you have here is a stock that was pretty much flatlined for 10 for some reason for a long period of time. We got that turn after that drop down by the 7 range. We got a call on a daily basis at about 979, currently trading at about 960. Yeah, give me symbols that you want me to look at. Don't give me a name. Give me a symbol to look at. AAOI, which we have that one. DocuSign. DocuSign recently came out or actually it came out with some earnings that really were good back in September. It's been riding a nice ride. Very choppy, though. This is not a stock that I would look to trade because I'm seeing that it seems to come up and get brought down, back into consolidation, seems to get a hit. You could look at history and find where there's cleaner lines, cleaner coloration of the overall stock and the autopilot. When you're seeing clean colorations, well, that's a lot better. Back to like the Tesla, let's go to Apple, for example. There's probably some clean lines there. I mean, it's clean lines here. You got long runs on the daily. And again, whether you do this on a 30-minute, a 15-minute, you do it on a 90-minute, whatever it is, you got long runs that really work out very well and that hold really nicely. Very tight ranges with your altimeter, very short ranges up and down. That's a good thing that you want to see. A couple of stocks that you have here. Let's see. We have PVG that came in. Pretium Resources. So this is interesting. You saw some really good good runs here off of a base that was really good. You have a trend that held up. You see this move from about 750 up to 13. Then it gets a little wonky. You got a gap down. You got this big gap area that you got to worry about. So right now, when I look at this, and I don't know anything about this stock, but I look at this, I start to draw my levels here, and I see that you have this big range of just nothingness. Obviously, there's a gap down in there, but before that, really, we have some more gap areas that were just kind of open. So now when we kind of combine both of those, we have to look about if in this range, if we start to get below this, below the, where we are now, about 1075 and down from there, the potential for it to get back to about 975 is pretty reasonable. Now, is that a big move? Is that above or below your risk tolerance levels that you can handle? Something you're going to have to figure out. But I would say that you have a reasonable amount of overall, and this is at about $10. $10 is your overall level of some, I would say, support. I like it better down here, about 958, but still a lot of air in here. And unless it gets above this level, about 1150, and then where are you going to go? Well, you have a lot of upside resistance because, of course, the support turns into resistance eventually, and that's what you have going on right here. So PVC, I think, is interesting, but again, until it gets out of this little wonky mode, I think you potentially have some downside again until you get this rolling again. And don't forget, you see the aileron is on the negative side as well. What else we got? We got Plug. Okay, this came in as a request. Pretty bouncy, nice moves to the upside here, nothing to the left. Let's kind of go back a little further. I want to see what this is. Yeah, so Plug Power, which is right now getting towards all-time highs. Clearly, if you get above this 435, could see a short squeeze. We got good momentum going on. So this is something I like from a very speculative standpoint that is very interesting. Where's your downside? Well, I don't know. You got nothing really to the left as we look from right to left, right to left, right to left. Not much. You got some basing that goes on, probably in the, I would say, 3.25. Much better down here at about 290, which you don't want to hear that, of course. But right now, there's a little bit of air. You have wide areas. Look how wide these are compared to some of these consolidated moves in the area of June through September. And when you see these, you often look at these as a springboard. You see this is a compressing spring that's really starting to just get more and more compressed. And when it moves out of that range, whether it's up or down, it's often considerably important. And that's because what we're finding here is that's where the money is laid down. These lines that we're putting on here are all about where traders are putting their money, where they are looking at the overall levels of interest from the standpoint of volume and where they're really pushing their money in. We got time for one more here. Is it IPR? No, IPR, sorry. That didn't work either. We'll do this one. What's the other one? IIPR. Did I not get that right? There we go. IIPR. Again, a general downtrend overall, and then you're getting some basing here. You get some upside movement on the market in terms of the level of aileron here. I think there's a lot of clearing that has to happen with this one. And let's go back to Kodak for a second. Kodak is getting into its resistance. If you do get above the level of here, you could try to look at this as an opportunity to play a bounce on the upside. I would question this because we're not seeing a lot of really good momentum happening right now, and there's a lot of air underneath. So just as a point. I'll mention one last time, if you do want to check out any of the indicators, you can go over to either TriggerCharts.com. I put a link inside of the chat, so check that out as well. And let's see what's going on there. Did I mention something? Commander Series is for 10 days, and I think including the weekend, yes. But check it out. One of the things we do is, of course, we could look to extend that a little bit if you want to take a little bit longer look at that. I want to thank you very much. We'll be back again next Friday talking about markets. Make sure to have your symbols ready to go as well. And I will see you again next week. Thanks so much.